All right, we are live, and there was a question about the tracker. Now, one thing I do want to point out in the Documents tab, there is something. Let me make sure what it's called. It is called. It's called Clean Tracker. I'll post it here in the room. So that is at least somewhere for you guys to start with a tracker that you can have. You can either input your own trades or you can put your own trades going forward, but as opposed to trying to get in here. Okay, so there's a couple things, and the three tabs that you're going to want to focus on are aggregate, day trades, signal trades, or swing trades. These are things that I've been tracking. We're looking at a possible new methodology, and when you do that, you just don't come up with what could be a great or a horrible idea and just start trading it. You need to compile some data and get some of that under your belt before you can say, well, let's unleash this system the same way that new traders should sim trade until they're comfortable. Even veteran traders like Pat, Charlie, and myself, you just don't go jumping in both feet because you think you have a great idea and you're just excited. Okay, so you don't have, you can look at it. You're not going to get anything from it because you don't know what the methodology is. But the two things that you're going to want to look at on a daily basis is day trades, swing trades, and aggregate trades. And kind of the whole reason for the tracker, whether you're using mine or whatever, is to become accountable to yourself. Because you can sit there and say, hey, I think I'm doing pretty well. Well, if the numbers don't prove that out, then something's going wrong. Okay, so it's easy. The input is easy, and you don't have to input everything that I do. I tend to be a little bit more. Fastidious with my spreadsheets and data and things like that. Some people are numbers driven. Some people just have it in their head and can do it. But let's just look really quick here at Nike. Okay, so entry and exit, that's easy. These are both going to be the same date because they're day trades, right? I keep track of what stock it is, where the price was when I got in, where it was when I got out, as best as I can because things are flying around. What option are we trading? These are the 81 puts. What price did I get in? What price did I get out? Where the implied volatility happens to be, where that happens. So it doesn't really matter. The IV really doesn't matter because we're in this for so long that really for them to change implied volatility, actually a 6/10 change in volatility is actually significant for how long we were in that. But I'm not going to make day trading decisions based on where implied volatility is. Actually, it's just another piece of data. Remember, we always talk about how allocating. Why is that important? Nancy, the IV number. Well, you're either going to have to look at it on mine or it's somewhere on your platform. If you have an options trading platform, implied volatility is going to be somewhere in there. I pull it from. Yeah, well, the reason, and I was actually talking with Mo, our sales manager, yesterday, because he was asking me about Thinkorswim's implied volatility, and there is on the chart you can actually put implied volatility on a Thinkorswim chart. The thing is that they don't define what they consider to be implied volatility. Is it implied volatility for 30 days, 60 days, 90 days, 10 days? They don't say. So where we see here on LiveVol, and this just comes out of Scott and I using this for years and years, that we're comfortable with these implied volatilities. Are they right? Well, everybody tweaks their model in one way or another. But for me, here's my IV column. So now that we're trading 81 bucks, these things, they were trading 37.6 vol, now they're trading 37.2 vol. So it doesn't take much to move them. But that's where it is on Sterling Vol Trader. You can get a general idea See, because here, if we look here on a trade, okay, so I just happen to have, let's get Nike up there since that was the most recent thing. We can see that if we have all of these closed, there is a volatility here. It says 33.6 plus or minus 1.97. I'm actually not 100% sure what that 1.97 is. It might be, it looks like it is the projected move if I had to guess. But like I said, but if you look at this, okay, so they're showing a 33.13 vol for August 9th. Well, if we go to the August 9th vol, this vol is 31.2, and then this vol is 31.1. So that's actually pretty close. During the day, when I was speaking with Mo yesterday, I can't remember which one we were looking at, but these vols were like 4 and 5, 6 vols away from this number. So I'm not exactly sure if it's just the time of day or how wide the markets are, but since I don't understand it and they don't define it, I'm not going to use it, and most likely neither is Scott, because all the with the calendar spreads and everything that you guys are looking at over in Scott's room, he's using Sterling Live vol. You see when he's manipulating vols. So like I told Mo, I wish I had a better answer, but the mere fact that I don't understand it, I'm not going to put it out there as something that I trust. Not that it could be right, I don't know, but it's, we can compare the two. Let me pull this off here and let's go back to this. So this is showing a 36.6 vol, and this is showing a 31.2 vol. That's significant to me. Even though, let's go out to the 16th, because the 9th is relatively short amount of time, and implied volatility tends to mean less and less. So here vol is 29.9, here it's 30.9. Closer, but not great. 81 halves are trading, implied volatility is 30.04. Here it's 31.6, so they're slightly different, and really it's not going to make a huge difference, most likely. But if you start dealing with stuff that is Vega heavy, then I don't want to. I want to go with something that I've trusted, and the implied volatilities that we trust. Okay, so then now we know that commissions come into play no matter what. Yeah, that's fine, and because really that's fine. I just do it just because we've always done it, and it's just a piece of data to have. I did make this dynamic so you can put your commission rate in there. Some people pay as little as 20 cents. Some people pay a lot more. So since it's not a constant, and any commissions that Scott or I are going to pay are going to be a lot less, so I don't want to reflect that. So you can put in $1, you can put in 10 cents, and it'll calculate it out for you. Right now it's just set to 0. Okay, allocation. How many of these do I want to do? Well, I've said for these that if we have a $25,000 account and we want to allocate 5%, that means I want to allocate $1,250 per. So then I put the price of this in here, and it gives me 13.74. So I did a 14 lot. Now remember, early in the day when stuff was flying around, I said, you know what, I want to cut these back. So I cut back, well, not quite half, more like 2/3 of my normal allocation, just because everything was flying around, and I didn't want to get all chopped up. Once stuff became a little bit more, and usually, we have pretty orderly markets. We're going to be allocating in this $1,250 range. Now, if you have a $50,000 account, you're going to allocate twice as much as I am. If you have a $10,000 account, well, my allocation is going to be 2.5 times greater than yours. Then, for each trade, I say if it's a winner or loser. If it's a winner, I put a 1. If it's a loser, I put a 1. I have my capital at risk, which I just showed you, which is just how many we traded times the price times 100. And then we track ROI, return on investment. Not only do we track ROI, we track ROIs for our winning trades and we track ROI for our losing trades. That's important because not only, and then duration of the signal is not going to mean a whole heck of a lot because they're all day trades, so the duration is going to be 0. And then I do this in dollar terms, so I can say how much is it going to be in dollar terms, my winner and losers, how much is it going to be return on investment, Dale, ROI, return on investment. So I can sit here and I can look at this and I can say, okay, over the average of these trades that we've done, what is my average win and what is my average loss? If this number is smaller than this number, that could be a problem. It's not necessarily a problem as long as you're right a lot more often than you're wrong, but it's an important thing to look at. So it's not just, hey, what is my return? It's how often am I right? And when I'm right, how much money do I make? And when I'm wrong, how much money do I make? And that's down here. So just for the day trades, we've done a total of 623 trades since we started this in March of 2018. We've had 393 winners. We have 230 losers. So that's a 63-37 win-loss ratio. Very, very happy with that. Equally as important is, well, when I'm right for on average 9.16%. And when I'm wrong, I lose 5.81%. Those two things translate into, right now, an annual yield of 75.5. So you're going to see the same thing over in the swing signals. Nothing's different other than maybe implied volatility means a little bit more. The dates are going to be different. And then, go back to day trades since that's one. And then I do break this out by months. And here's something, when I talked about accountability, those that were with us at the end of the year last year, what happened on swing trading? Sorry, it's over here. Okay, chugging along, fine. Kind of a bad month, fine. A nothing month, fine. And then when we got in October, what happened? Well, that's a pattern. So what happened there? One, we stopped trading. We stopped swing trading because the market was just going up and down for no reason. And so you get blown out of your swing trades. What happened after that? Well, we started bringing these back in, and we started allocating less until we got comfortable again. Now we're, up in this area, we were allocating we were allocating 25% of our normal allocation of 3%. Now we're starting to bang it up because I'm more and more confident, at least I was, to allocate 50%. If we get a more trending market in either direction, I'll be more apt to go with the full 3% allocation. But as it is right now, our bread and butter's been day trading, and so let's focus on that. I don't want to take ourselves out of this game, but I'm going to allocate less and less. Just like when things were swinging around this morning, I said pull back on your allocation. I'm allocating less until things calm down a little bit. I don't want any big losers. I don't want to handcuff myself, mentally or physically. Okay, and then both these things, I do aggregate things so you can look at each month. Sometimes swings trading is better, sometimes day trading is better, but what you don't want is you don't want to be up 5,000, down 7,000, up 3,000, up 10,000, down 15,000. You want to see somewhat of a normal type of return. If your returns are up and down, you're going to drive yourself crazy mentally. Okay, so any questions on that? I know this is something, a lot of times,
for me, it's like monster.
So like I said, I did post that up there. The clean tracker, if you guys want to start to use that, it's easier because if and when you have questions, I know what I'm looking at. If I have to try and figure out your spreadsheet, I may not have time.
A lot of stars have to line right.
Thank you, Alan.
It absolutely can, and if it does, it's going to explode.
And that's what it does. It keeps you honest to yourself. Hey, I'm doing really well. Well, where are you doing really well? Here, concentrate on that. Hey, I'm not doing so well this month. Well, go look at what's happening. Oh, basically every time I do a swing trade, I lose money. Stop swing trading. I mean, I honestly had to. I had to have Scott say that to me. I'm like, man, swing trading is just killing me. He goes, then stop. That's, you know, I mean, it sounds simple, but it's that's what you know you have to do. You have to, and that's why it's important to have your team to lean on. Scott, Patrick, and Charlie. Hey, what am I doing wrong here? Well, you're being way too aggressive in this market, Mike. Okay, you're not being aggressive enough. Okay. So yeah, this spreadsheet is available. I update it every day, or at least I try to. And so it's in there. The clean tracker I posted for you. Good question, Eloise. And let me know how it goes. Any other questions? Throw them up there. I will render this video. I'll probably put it up on the blog today too for those that have trouble finding it in the documents tab, which I agree. I mean, there's nothing we can do about it. The documents tab, we do our best, but we have no way of sorting it. We have no way other than deleting stuff. So, but we do have it. I post all of our videos to the blog, or sometimes some make it to the blog, some don't. Everything goes on the campus. So anything that Scott does, or I do, or Charlie, anything like that, that's out in the campus in each section. And they're called, I think, methodology applications. Scott has hundreds of them. I have probably close to 100 out there.
What's monster pricing at 5%?
The tracker, I think it's called STO Prosper Trading Academy Tracker, and then the date will be at the end. So that's the one that'll be posted today. That's just the name of it. That's not the actual spreadsheet.
They struggled. They couldn't get above 66.
All right, let me get this video out to you guys, and we'll move on. Hopefully we get some. I bet you we get some trade this afternoon. So to make enough money to live on, trade more. It's all a numbers game, Dale. I mean, to think that you're going to have a $5,000 or $10,000 account and be able to make $100,000 a year. That's somebody trying to sell you something, man. We are not about hitting home runs, and when we swing and miss, then we're nowhere to be found. I'm not telling you there are people that don't put out, returns that, are way bigger than any of us here, but you don't hear about their losers. No matter what amount of capital I was trading, if you returned 70%, I mean that's a rock star trade. Maybe not so much, as a market maker. Maybe you could do a little bit more than that, but that's a completely different type of trading and a completely different game. Well, it depends what you want to do for a living. $25,000 account. If 25,000, and if you want to make 70% return, well, that turns your account into 42.5. But then that's 17,500 in trading. That this is not, and if this is not a get rich quick. Now, as your account grows, well, then you'll be allocating more, and if you apply the same rules to what you did with, the way that you treat a 2 lot or a 200 lot should be the same. It's just add a couple zeros to it, and if the liquidity's there, I would say that if you're trying to trade a $10 million account, you're going to have a tough time doing it in a lot of these stocks. Why? Because you're going to overwhelm the market. Nobody comes in with $10 million or even $300,000 order. I mean, they do, But good luck getting that done in, you know, something that isn't an Apple or Facebook. But yes, and especially, you know, to think that you're just going to come in and learn this stuff and get the psychology part of trading straight, and that you're just going to, you know, suddenly, you know, make a living out. You know, just like anything else, you don't show up to the first day of college and say, well, now, you know, I guess, you know, I'm basically a PhD, so why don't you pay me? You pay tuition, you learn, you take time. And you know, that's not meant to be discouraging. If anything, it's encouraging. Learn small and don't try and hit home runs. All right, I'm going to turn off the recorder. The good session, guys. Ask the questions. We'll keep talking about this.